How do you trade multiple pairs where it's almost effortless, it's smooth, and it's not stressful? People ask me that question, say, Mark, how do I trade more than a few instruments where it's not stressful? And I always hit back at that as, how do you not have more instruments on watch? Because I can assure you're not comfortable going through a long period of drawdown because you're limited to one market. And I always ask them, right, so what do you trade? And it's a combination of things, where it's euro, dollar, pound, dollar, a bit of both, maybe a Japanese yen in there as well. And then sometimes just gold. That's the interesting one, just gold. I say, right, so how do you trade gold now when it keeps hitting all-time highs and it's uncharted territory and you keep trying to short it? What do you do then? Because you traded different instruments before, or you had a plan on how to trade something based off of the fact that there's certain levels, areas of volume where it previously sold off of, or areas in which it's a good area of value to buy, like whatever it is, you've traded in between those levels with your system, with your strategy. But what happens when it's uncharted territory? What happens when it's not really a technical analysis issue and it's more of a macro based thing, because you're dealing with a precious metal and it's at an all-time high and it just keeps hitting an all-time high, and the fact that we're in an election year and there's so many other variables? What do you do then? Do you just go through it? How do you know when it's going to end? When are we going to hit a new all-time high? You don't know. And because you don't know that, it's so risky, and in my opinion more stressful, to be limited to just a few pairs and then figure that out 6 months later. Right, funding's gone, you're in loads of drawdown, you're in a negative headspace, and you're just so further away, you're not making the money you want to make. So it's pointless. You waste time, you waste energy, you're stressed out. So really, it's more stressful. So what I thought I'd do, this is my watch list for this week, and I want to give you a live example as to what I mean by this. It would be the equivalent of, look, I've got these instruments on watch. You can see my daily watch list here is CAD yen and euro sterling. So there are two pairs on watch there, right? These are the other pairs in my watch list for this week. It would be the equivalent of me going, right, I feel stressed because I'm looking at all these pairs and I feel the need to check them. Stress is gone. How easy is that? How easy is that? It's ridiculous. To me, thinking that you're more stressed because you have more to look at is the biggest telltale sign that you don't know how to regulate your emotions. That shouldn't stress you out. It should be clear, it should be simple, and you should know when to walk away. So how would that would be the equivalent of me, let's say a pair that I don't have on watch right now, where I had pound dollar on watch. I'm stressed now. That stresses me out. The fact that when I'm on euro sterling and I have to click again, now see GBP USD, I'm madly stressed. It doesn't make any sense. It's ridiculous. So it shouldn't be more stressful. How you should do it is like this. You have your watch list. So let me put these back in. Right. What I like to do is I have top pairs that I think are going to be the key opportunities for next week, and I have some additionals. Now, the additionals are going to be things that I share with the community based off of, it might be ready this week, it might not. It might be ready later on in the week based off what we're looking at, it might not. But it's just good to have there, because you never know when something's going to have a quick move, and you never know when you're going to have a really slow pair. As an example, let's say you only trade pound dollar. What if it's really slow that week? What if it's just like this? Look at an example of pound dollar. It's the equivalent of, let's say you only traded this instrument and you was trading here. Why do I think that's more stressful? I think it's more stressful because if you're just limited to one market, how could you tell me that you're not going to force positions? How could you tell me that throughout the whole year, if you only, let's say, trade New York or you only trade London session? I'm going off of the back of the questions that I receive, right? This is it's nothing personal to anyone just trading pound dollar. I don't care. What I'm explaining to you is just when you get the same message over and over again, and I just give them common sense, it seems to help. So I'm going to go and bank on the probability that if you just trade pound dollar for the whole year and you only trade in New York session, then there is a high chance that if you've not taken a trade, you're closer to forcing a trade that is just not a trade. You guys know this, you're traders. There's not trades every single day, not high quality trades. Don't care how you trade. There's not going to be high quality positions every day for the whole year. There's going to be trades, but there's loads of trades to stay out of. So what's the chances that you go through these long periods where you're like, right, you're zoomed in like this, you're trying to make sense of everything, and you're trying to force positions like loss. Yeah, these are all avoidable losses that if you weren't limited to one market, you could build your watch list in a different way. You want to be taking advantage of these runs, and you can wait for them. The problem happens in between. You give all of your profit back in here because why? You're stuck to one market. So that to me is way more stressful, and it's not a good predictor of success long term. Not met many people over a 10-year period that just trade one instrument and one market. Very, very few. Most veterans, your old school traders, or people that have been in the game like myself for a long period of time, they're not just trading one pair. So if we take a look at how we would build this and make this simple, as an example there, remember I mentioned about gold. So let me show you this. So on gold, I remember here when we broke out around this area, someone said this to me. It was like, right, Mark, you know, we're at all-time highs. I think it's going to sell off soon. So they started selling in here, selling in here, selling in here. It took like 4 or 5 losses. And then what did it do? It just went up. And what do they think now? It keeps going up. They're like, right, well, maybe we're not going to sell off. Maybe there's just going to be another all-time high and another all-time high. So what do they start doing? The opposite. They start buying around here because they're zoomed in into a super lower time frame, and they're like, right, what if it just keeps on going? So they start buying it there, and then loss, because it sells off. Now they're thinking, oh, maybe the real sell-off is happening now. And then guess what would happen? Most likely something like that. It just becomes part of the consolidation. And they're just chasing it. And that's only because you're chasing one market, where if you weren't restricted to that, you would at least be able to be a bit more objective and go, right, we are in uncharted territory. There's a chance that we might sell off at some point, but let me mark on where you can see a real shift in trend, where you know there's a high chance that the selling has truly started to take place, and you can start to get into more of that bearish sentiment versus you trying to predict it or trying to think when it's going to happen. Like, you're not here to predict the market. So that's an example of what I mean by that. And it's not that you weren't successful before. It's because I know there's a high chance you're going to force it. You're going to zoom in. You're going to lose all of your money. So what's the point? What's the point in you getting to multiple 6 figures of funding just to give it all away because your ego's there and you're just not willing to be open-minded? So when I look at a watch list like this, I'm not checking every 5 seconds. I literally spend 10 minutes in the morning going through, and I'll look at, right, DXY. DXY will be important for our positioning because these are 3 key value areas. Why is it important to me? Well, dollar cross pairs, the inverse will be euro dollar. So I know for a fact that if this is an area of value that we're going to respond to and price sells off to here, and we've got a weakness on the US dollar, I can go over to euro dollar. You best believe that this is going to be a buy. What can I identify? This is an area of value. So I'm looking to see confluences that meet my setup, that this would be a decent area for buying opportunities that I could potentially hold if we're going to get a sell-off here. That's it. And if the trade's not ready, for example, on euro dollar, trade's not ready, I look at it for literally half a second and I move on, so it doesn't go into my daily watch list. So I'll spend 10 minutes literally going through, and we can just go through it now, right? This is how, less than 10 minutes, because I can just speed run it. So for example, I'll look at this on the 4 hour, on the 1 hour. I'm not going to go into every entry criteria, but I'll be looking through. I can see, just from my perspective, messy, leave that alone. That's not going to be, I'm not interested into assessing how this closes tonight. Same thing. If I look at Kiwi Yen on the 1 hour time frame, leave that alone. For, again, if you're in Falcon, you'll know why, just by these bullish wicks here. So again, that doesn't need to go into my daily watch list. Straight away, Aussie Yen doesn't need to go into my daily watch list. Euro Sterling, it does, crystal clear. Aussie Dollar, I missed this trade in particular, but this will go into my watch list. Euro Dollar, not going to be ready until tomorrow because we've got a value area here. So chasing a buy early, not interested in that. Aussie Kiwi, this can go into my daily watch list because we started to reject. This will be more of a tonight play, right? So I'll leave it there now because I'm not going to be trading it until after it closes. So that's, you know, borderline, right? CAD Yen, that can go into my daily watch list. And then Aussie Swiss, no. And Aussie Kiwi might be tonight. So let's say there's 3 in there. Then I'll filter that even further. So this is my daily watch list. So really and truly, I could just close that up and go, this is what I'm focused on. The DXY is almost my direction when it comes to dollar cross pairs. That's how I keep it. But when I'm looking at something like this now, this is my daily watch list. I forecasted, take me 5 to 10 minutes. I know what I'm doing for the day. I've got my goals planned out. I know what I've got to focus on, whether it's meetings, whether it's trades that I'm looking at, whatever I've got planned on that day. Then I go one step further, going into the lower time frames. I've already, the great thing is my prep work has been done on the weekend. So I'm already done ahead of time. It makes this part so easy. I'm not stuck and sitting in a session for 2-3 hours and being so rigid trying to force something. What happens if you're trying to quit your job and you're miserable, or you really need to make that extra 3%? How on earth could you tell me you've not forced so many positions that if you had a few different instruments, and it doesn't need to be loads. I'm not saying go trade 12 pairs if you only trade one, but I'm saying have some form of variation, and you need to be coached on how to deal with that. So our traders, they're equipped. They can look at this. The reason why I've not traded this one yet is because we didn't go from, if I take this one back, so I was looking at euro sterling here. We didn't go on this one. This is a slightly larger candle, so I was waiting for a continuation around here. We didn't get it. And the fact that we didn't go off of this third section and now we're coming back up, I'm not looking to take this unless we get a complete break above and a move back in, and then I'll be looking for what we call an insurance entry. And then I'll be looking to take that ideally tomorrow. I actually have a live session tomorrow with the live trader guys, London session. So again, this will be the type of trade that we would look at in the live session and see if we can get that entry. The more and more this squeezes, so the further this goes without that continuation, the more likely that's going to be neutral. And you'll see it trap sellers into the market, and it will just push above, seek the volume up top, and then I'll look for it up there. So unless we get an insurance entry, leave it alone. So that's it. I can mark it on. I can put an alert there. I'm not doing anything else. I'm not checking every 5 seconds. Aussie dollar, again, this is going to be more of a tomorrow play, but I just thought I'd mark it in. I'll be looking for price to tap into that tonight. That's it. You know, if I look at the time of day, where are we at? So we're in New York session. So again, if this is not going to give me an entry within the next, I would say 2-3 hours, I'm not going to be trading it until overnight anyway. So I'll leave it alone. You know, I can set my alert once we get to that area, which we could do within an hour, but by the time it's actually ready, it's still going to take like another hour. So I know by the time this is ready, it's at least an hour and a half away minimum. So what am I going to do? Stare at the screen, look at every 5-minute candle, try and make something off of something. There's a high risk entry that's going to close in 25 seconds, but I'm not interested in that one. It would be this one here. Right, so there's your high risk entry. I'll be waiting for something to develop into this area, so I'm fine leaving that one on the table, but permitting that we close in 12 seconds. So we'll see how that closes. Right, so that would be an example of if I'm in loads of profit and I want to be aggressive with this particular trade, the setup itself, that would be an entry. So someone would put that on. You'd be in roughly here. You would get probably about 11 pip stop. Target would be 2 to 1 to break even. So you'd move it to break even when you're in 2%, and you'll be looking for a 4-hour trade, which would line up towards this area here. So yeah, you've got a lot of room in this particular position. But anyway, so again, that'll take 2 seconds. I know where I'm at. And CAD yen, waiting to see whether we hold on this value area here. So this would be more of a yen play overnight. And again, waiting for an insurance entry. So by the time this is ready, it's at least 3-4 hours away. Leave it alone, get on with my day. That's it. This is how simple it is. Now that I know that, I'm not sitting there thinking, right, every 5 minutes, you know, I'm doing this. Why do you think our trades? We just had another person today, by the way. I need to announce them on maybe tomorrow. They just passed on the in-house fund on their assessment. So they've now got a 60K account, portfolio asset manager. That's it. They're done now. And do you know why? Is because our strategy is flexible. I've not even spoken about H4 mastery. I've not spoken about 5-minute AFT aggressive entries, where if you are the type of trader that's a bit more aggressive, you want to take a bit more trades, you'd probably fall into that trap. But that would be like the Aussie dollar position I just showed you. That would be an example of this. Like it's 2:45 in the afternoon. I get on with the rest of my day. And it's flexible. Why do you think we have so many people passing on our in-house fund? Why do you think the stats of our traders getting to funding is so much higher than third-party funds, even though we're dealing with a smaller sample size? You've now got hundreds of examples. So like it's not by fluke, it's not by chance that all of these traders in all different continents all over the world happen to just have a higher pass rate. Why do you think that is? It's because of the strategy, the support, the network, the mentality, the processes, and how our ability to filter out all of the noisy crap trades that you find a lot of amateur or a lot of the retail market that lose are on that. So we avoid those like the plague, and it's about identifying it. And it's all of the trades in between. It's not the trades that you do take, it's the trades that you don't take. Lots of inconsistent traders take good trades, they take winning trades. They just don't know how to keep themselves out of the market. And I think a lot of the time it's because they're limited to one or two instruments, or they think if you have multiple pairs on watch, it's stressful. Do you really think it's stressful for me to just go euro sterling, I'm waiting for that entry, Aussie dollar, I'm waiting for an entry here, and CAD yen, I'm waiting for an entry here? For 10 seconds, nothing stressful about that. This is all in here. This is propaganda. This is brainwashing from people thinking this a fantasy idea of like, I just trade one time frame, one pair for 1 hour a day. What you think the market, that is one of the most difficult things that you'll do, that you can just rock up with this perfect fairy tale routine and just make millions and millions of pounds. There's a reason why most people can't do that. There's a reason why most, even just look at scalpers, right? You're statistically more likely to lose as a scalper. You're not more profitable as a scalper. The data has been there for long, from when I've been trading, right? And I've been trading for nearly 17 years. So if you're going to be just limited to that, I don't think that's within your advantage. I think you need to add more to your arsenal. I think you need to add more things in your locker, where knowing when to be aggressive, when to scalp the market, and when to take a step back and take more of a longer term position. It could be a couple of days or maybe just for the whole day. It just gives you more flexibility, more to work with. At the end of the day, why did you sign up to trading? Did you genuinely sign up to trading because you was obsessed with this idea of trading London session? I highly doubt it. You didn't even know what London session was. You found that out after. You wanted to learn to trade, to make money, quit your job and have freedom. So it's really important. Remember why you started learning to trade. This is mad stressful. I've got now 4 pairs on watch instead of 3. I don't want. What am I going to do?